Okay, so in this part of our course, we are going to deep dive into um, how to do a budget. So I've got two objectives in this first session. One is to just set the basic process of what budgeting is and how we're going to do it. And then secondly, I want to assign you an exercise. So we're going to walk through an exercise. I'll demonstrate it on the screen, and that'll then lead you into starting this process for yourself. Okay, so in our Lazy Man's Guide to Budgeting, there really are about 4 stages to the budget process. I call this the budget cycle. Now, I don't ever want you to think of a budget as a document or as something that is static. A budget is a process, it is living, it adapts, and it changes. Okay, a budget is never fixed. Now, here's something that people often forget is that wealthy people use budgets too. And in fact, being on a budget is not a sign that you are poor. It's a sign that you want to manage your money. Whether you have a little bit of money, whether you're a teenager with pocket money, or whether you're someone earning $1 million a year, you should still be using a budget to help plan your spending so that you can achieve your goals. Everyone should be using a budget. Otherwise, we end up wasting money. I'm sure you've all experienced that at some point. When you didn't have a plan, you ended up just spending on what was convenient and didn't realize what you were doing. And maybe you ended up missing another objective that you had that you could have achieved had you been a little bit more organized. So I want us to think about a budget as nothing more than a tool to help us achieve our goals. A lot of people talk about budgets as if this budget is a constraint on us, like a pair of handcuffs. Okay, that is the wrong way, in my opinion, to think about a budget. A budget is not a restraint, it is an empowerment process. It is designed to empower you to get to where you want to go in your life and your finances. Now, naturally, a part of that is making choices and choosing things not to spend your money on. But the purpose of the budget is not to lock you up and put handcuffs on you so that you can't do fun things. Okay. The purpose of the budget is to empower you to do those fun things you actually want to do. As a cost of that, there may be some things you decide you won't do. That's what we should be thinking about a budget for. Okay. So, first of all, it's a tool. It's designed to empower us, not restrain us. And it's designed to help us put our goals into action. Okay. So, if someone doesn't have a budget, the alternative to a budget is to hope that chaos will miraculously turn into results. I want you to think about that for a second. The alternative to using a budget is to hope that chaos will miraculously turn into results. Hope is not a strategy. Now, some people can run their life without a budget and they sort of get what they want. For most of us, we need a little bit more structure. And I want to just say, if you've tried budgeting in the past and you gave up, it wasn't the budget's fault. A lot of people have said to me, "Oh, Peter, I tried budgeting. I worked really hard at it, but it just didn't work." Well, if I'm being really pastoral and really polite, I wouldn't say the next thing I'm going to say, but I'm not that kind of person, so I'm going to say it anyway. It wasn't the budget that didn't work, buddy. It was you. Okay, because the budget is not a constraint. It's not something that forces you into something. It's something that allows you to get what you want. So if the budget didn't work to get what you want, it wasn't the budget's fault. It was your fault. You see, either the budget was unrealistic, and this is the most common mistake I see people making, is they set these really unrealistic budgets. And then they wonder why they can't live by them. Okay, so either you set an unrealistic budget or you don't have enough self-control to live within the budget that you have set. Now, sure, there are sometimes things in life that throw you a curveball. And I think over the last 10 months, we've all experienced something like that. Things that we just couldn't plan for. Okay. But a good budget will provide for some element of that. And okay, now maybe 11 months of a pandemic may be hard to have planned for. But, you know, we should have been able to have planned for the first few months of the pandemic. Okay, that's what a good budget will help you do. It'll help you ride out the uncertainties of life. It's never going to fix every problem. It's not a cure-all, but if we have a good budget in place, we have better resources to be able to sustain these curveballs that life is going to throw at us. Now, the budget process that I'm going to teach you has been designed to be done on paper. And the reason why I've done this is because I want to keep it relatively simple. We have a tendency to overcomplicate things. So the process that I'm going to teach you has been designed to work on paper. Now, in reality, you're going to have a lot more fun doing it on a spreadsheet of some kind. If you're not a spreadsheet person, don't worry, you'll still be able to work it, okay? But it works better when you're using a spreadsheet, and I'll give you templates that you can use. I will talk towards the end of the course about what software options you have, but I want us to start this process following it through, either on paper or in a spreadsheet. I'm going to give you an Excel document that you can use, or you can open that up in Google Drive. If you don't have Excel, that's fine as well, and you can use these templates I give you to be able to run these numbers for yourself. Okay. And we'll talk at the end of the process about how you might go and implement this in various software. But the method I'm going to teach you doesn't fit most software products, unfortunately. So what are you going to need to be able to do this well? Okay, I recommend you start with a shoebox. One of the problems when you're putting a budget together is it does create a bit of stress. And especially if you are struggling right now with finances, every time you go and open that mailbox, the only thing you get these days in the mail are bills. Okay, so maybe these days even the bills in the mail are gone because everything's now coming to us electronically. But what I want us to do is we want to have a shoebox where we're going to store these things that we're going to work on. When you get home at the end of the day, you're going to take your receipts and you're going to drop it in the box. Any bills that come in the mail, you don't have to open them. You know what they are. Just put them in the box. Okay, and then you can close the box and don't think about them yet. You'll need a calculator or a spreadsheet. You'll need the copies of the worksheets if you're doing it on paper. We're going to look at some current financial information. We're going to look at a bit of historical information. Once we've got this all set up, it takes less than an hour a week to maintain. You also need a reason to keep going. So this is where goal setting becomes really important, because when you know what you're aiming for, it gives you that motivation to put the effort into to make it work. And obviously, you need commitment to see it through. A lot of people start budgeting, they're good maintaining their records for the first month, and then it gets a little mundane and they stop doing it. Budgets just don't work for me. Well, it's not really true. That's what you're going to need. Some bank accounts. Hopefully, most of you will already have these. This is what I recommend that you set up. You need to have your main checking account or your transaction account. Probably you'll have a debit card or an Interac card that will work with that. You'll want a credit card. I recommend. It's optional. If you've had bad credit in the past or you don't want a credit card, that is fine. You can go without that, but I'll talk about credit cards in a second. You're going to want a savings account, and I recommend you not allow your savings account to be accessible by your debit card. Okay, you know that there's those buttons on the machine. Okay, you can actually put your debit card in a machine and choose the savings option. Okay, you go to your bank and you ask them to switch that off, please. They can do it. Okay, because you don't want to be able to access your savings account for an impulse purchase. You may also want what I call an accumulation account. This is where we take our surplus cash that we don't need right now and move it out of our check account so we don't accidentally overspend. Again, that's completely optional. Now let's talk really quickly about credit cards. Yeah, you hear a lot of Christian finance teachers saying credit cards are bad, they're evil, you shouldn't ever use them. I disagree. I like credit cards. I like credit cards on one condition: that you pay it off every month. So why do I like credit cards? First of all, it helps build your credit score. Okay, so this is for Lauren. When you're old enough to have a credit card, get one. Even if it's only got a $200 limit. Okay, every month buy something on that credit card. Wait till the statement comes and then pay the balance off. That will build you a stellar credit record in only a few years, okay, even less than that. Okay, you will have the same credit score as as your dad does, in less than a year if you follow that strategy. If you ever want to buy a house, you will need a good credit score. So having something on your file that shows you've been able to manage debt is incredibly important. Okay, if you ever need to go and buy a car and you need to finance it, you're going to want that credit score. Not that I'm in favor of borrowing money to buy a car, but if you ever need that, you're going to want that credit score. So you always want to have something that's going to be building your credit score. Using credit cards lowers your bank fees. Banks in Canada charge like wounded bulls. It is outrageous. And so every time you go and use your debit card, that is a transaction on your bank statement. And if you're paying, like most of us are, for the number of transactions on our statements, and you go, the average person spends, maybe not during pandemic times, but pre-pandemic times, the average household has about 3 to 5 transactions a day on average through all the various things they do: online shopping, in-person shopping, train tickets, snacks, Tim Hortons, snacks and Tim Hortons. That we all have these things and they add up. And if you're paying, even 25 cents per transaction, they add up really quick. Whereas if you put them on your credit card and you pay that credit card balance off every month, that is one transaction. So using credit cards can lower your bank fees. If you've got good enough credit, you can get a rewards or a cashback card. So we actually use a credit card that gets us earns us rewards at the supermarket. So every time we go shopping, it's great to say, how many points have I got? Great, $10 off my grocery bill. And yeah, it's fantastic. You can use those credit cards for things you would have already been spending anyway, get those points and then get them for deductions or rewards or cash back on your purchases. Credit cards give you protection when you buy something, especially online. Most people don't realize this, but debit cards give you no online fraud protection at all. So they are not required to refund a debit card charge, whereas credit card charges, they are. Okay, so it's always better to use a credit card online than a debit card. And it's just convenient. It's nice and easy to be able to use your credit card and rather than have to use a cash or use a debit card. Okay, so what's bad about credit cards? I recommend that these are my rules, okay? Only use a credit card for purchases that are projected within your budget. Never use a credit card for impulse spending. Unfortunately, that's why they want you to have them, because stats will show that people who are spending on a credit card spend more than people who pay in cash. This was established well before everyone had credit cards. Okay, but what they found was that if you had access to credit at the checkouts, you tended to spend more money because it didn't hurt as much when you left the store. Okay, so you only want to use your credit card for purchases that are already within your budget. You must pay your balance off in full every month, every time, on time. And I recommend you automate this. You contact your credit card company and they will have an option to automatically debit your check account for the statement balance on the due date every month. Obviously, you want to make sure that you've got enough money in the check account to fund that. But if you don't pay your credit card statement off in full, you've waived your interest-free period on every purchase on your statement until your statement is paid off. So a lot of people think, oh, I can't make the payment this month. I'll pay the minimum balance and I'm okay. No, you are now paying interest on that balance until it's paid off. And you no longer get that interest-free period on the next purchases you make, because now your statement is in interest mode and every purchase you are charged interest, and the average credit card charges 20% interest per annum. Not good. So you never want to be in interest mode on your credit card. Plus, it'll actually hurt your credit score. Even though that's what they want you to do, it actually hurts your credit score. So really important that you pay off your credit card every month, and then you treat that credit card spend as if it was cash. I know that you get an extra up to 50 days to pay, but you've got to think of it in your mind as if it was a debit card, as if that money is coming out of my bank account. I always think of my credit cards as if they were my cash on hand, because it's taking money out of the cash I have available. Now, you'll need a credit limit roughly twice your monthly spend. So if you spend $1,000 a month on your credit card, then you'll need a credit limit of double that, because you're going to have last month's spend, which is usually due about 20 days into your cycle. And then you also have those 20 days of the current month spend. So roughly two times your average monthly spend is what you're going to need as a credit limit to make that work. We put everything we can on our credit card. We have, usually between $2,000 and $3,000 a month going onto our, I mean, it's almost everything except the mortgage and the property taxes we have going onto our credit card because we get those points on it, which is great. So what do you do if you can't pay off your balance every month? So the first thing you must do is you must stop using the card. Absolutely stop. Okay. It's no longer a convenience card for you. It is now debt. It is incurring you interest every time you use it. You should now stop and switch to cash. And if you haven't got the cash, well, you can't spend it. Okay. Suspend the card. Now, these days, a lot of banks have a suspend function. So you just go onto your online banking or call your bank and you say, I don't want to cancel my card, but can you please suspend it temporarily? And that'll mean that you can't use it online. Any pre-authorized charges using recurring payments will get canceled or will be denied, and they'll have to call you for another payment method. Okay, you can often suspend that card until you're ready to reactivate it. Freeze your card. Okay, so this is a little interesting trick. Take the card and put it inside one of those snap size Ziploc bags. Squeeze out the air and seal up the credit card. Okay, then you place that bag in a takeout container, a plastic container. You fill it with water and you stick it in the freezer. Don't ever try and microwave that. You'll destroy the card. So yes, you can still use it online, but it's going to stop you from being able to whip that card out and going down to the store. Okay, and it's still available to you. This is why you put it in a Ziploc bag, so you're not corrupting the mag stripe or anything on the thing. But it'll still be available to you when you're ready to resume using it because you've paid off the balance. Okay, and then the last resort, obviously, if you can't maintain or can't prevent yourself from using that card, is you cut it up. And I'm actually really serious about this. You cut up the card, you even call the card company to cancel the card and start a payment arrangement to pay off the debt. Because what's happened is you've turned something that was a convenient operating account into debt of the worst kind. We're going to talk about debt next week, okay? But this is what you want to do. You want to stop using that card and you want to force yourself to not be able to use it until it's paid off. And if you can't do that, call the bank and cancel the card, or at least cut the card up so you can't take it out with you. And they'll always give you a new card when you're ready. Okay, just say, I'm sorry, my card got damaged. Yeah, self-inflicted wound. My card got damaged. Can you please send me a new one? Okay, they'll do that. Okay, so this is what the budget steps look like. So first, what we're going to do is we're going to create your initial budget. You're going to then start recording your transactions. That usually takes about an hour a week once you get used to it. We're going to evaluate and adjust your budget. Usually, half an hour a month or so is needed to sit down and look at where you're at and how things are going. And then obviously our plan here is to help you reach your goals, which as MasterCard says is timeless. So let's look at the steps here of creating your initial budget. This is going to be part of your homework for this week. So the first thing I want you to do when we look at your initial budget is we want to start by analyzing history. Now, I'm a firm believer that this is why people's budgets often fail, is they sit down with a blank piece of paper and they say, oh, what should we be spending our money on? And they write some things down. Now, when you do it that way, you miss so much. And so you end up with this budget. You go, yeah, okay, that looks good. And then you get to the real world and you realize that your habits have been so much different than what you intend them to be. So what we want to start with is we actually want to look at your history and work out what have you actually spent your money on. I recommend a 3-month window. Now you can do 1 month, okay, but 3 months is better because it covers more seasonality issues, okay. And so what you want to do is you want to get your bank statements and your credit card statements, and you want to get that data, yeah, save it as a CSV file from your bank if you can, and import it into the spreadsheets I give you, copy and paste it, and then we're going to categorize your transactions into 10 categories. So this is an example here of the worksheet that I use if it's going to be done on paper. I've also got a spreadsheet that you can do this for. And basically what you're going to do is you're just going to take your statement and you're going to put in the transaction date, who the transaction was with, positives are deposits and negatives are withdrawals. If it's a credit card, it's the same thing. A charge on your credit card is negative and a deposit is positive, payment is positive. And then you decide which category does this transaction fall into. Now, I'm going to give you 10, effectively 11 categories here, okay? These are the categories we're going to use. We're going to have an income category. That's where all your earnings are going to go into. And we're always going to do your earnings after tax. So whatever amount you receive in cash, that's what we're going to record as income. Okay, you've got 9 categories plus savings. Okay, these are the 9 categories I recommend. Now, there's nothing magic about these 9 categories. They aren't designed to be of equal size in any way. They're designed to be a little more convenient. Now, you can break it down to more than 9, but that just creates more effort. So I recommend you start with 9. So your first category is accommodation. So rent, mortgage payments, that rates, that's a New Zealand term, that means property taxes, power and utilities, insurance. If you pay for garbage disposal, you don't hear a Markham, so that's not relevant. Telephone costs, repairs and maintenance for your home, buying small appliances like kitchen, very small kitchen appliances, things like that, or even big ones, they would all go in your accommodation category. For most people, this is going to be your largest category. Your second category is food. So this would include anything you spend on other domestic operations, groceries, cleaning supplies, toiletries. I include lunches, dining out, and takeaways in this category. But some people would want to put that, say, in the general category because they want it separated from food. And that's fine. You set the policies you want to use and just work with those. Transport would include everything for your vehicle. So gas, maintenance, repairs, if you use public transport, not that anyone's traveling right now, your vehicle insurance, your registration, all those things would come under transport. Activities, these would be all your kids' school expenses, your sports activities, your hobbies. Again, maybe these are a bit low right now. Any educational expenses if you're a student. Anything that you would spend on those kinds of activities would go into this category. Entertainment. So you could put dining out under entertainment if you want to. Again, maybe right now we don't have many other things we're spending on this right now. So this is an interesting season. But things I would normally include here would be movies, vacation time, vacation expenses, special events, gifts to other people, coffee. That may be more like food here in Canada, especially if it's at Tim Hortons. Under your general category, this is sort of your everything else category. Haircuts, if you get nails done, subscriptions to magazines or other services, Netflix, bank fees. If you're my daughter, the fines you get because you didn't buy a ticket for the bus, your cell phone bill, unallocated cash, every time you withdraw money from the ATM, unless you are withdrawing cash and you're spending it on food, generally you're going to end up not knowing where that money went. Okay, it wants to go into this category. You will be amazed when you do your analysis. Maybe not these days because we're not allowed to go out and do much. But if you went and did this analysis for a regular year, you'd be amazed at how much unallocated cash most people spend. You don't see it, but it's there. Medical and clothing would be exactly what that suggests. Prescriptions, anything not covered by your the province or by your insurance plan. Clothes for yourself, for your children, anything along those lines. Giving would be donations to church and other charities. And debt repayment would be anything you pay off on debt except for your mortgage. I would normally put mortgage down as your accommodation expense. Now, some people will put things like car repayments and vehicle leases down as transport. I would say if it's a lease, definitely you'd put that in as transport. If it's a vehicle loan, you can decide whether you want to treat it as transport or debt, but we are going to treat debt a little differently than other expenses. So generally speaking, if it's a debt that needs to get repaid, then we want to put it here, except for the mortgage, we want to put that into this debt category. And then the last one is savings. So if you've got money going out to an RRSP, an RESP, if you've got money going into a savings account, we treat that as an expense. We treat that as the saving category, and we'll talk about saving in our last week. Okay, so those are the 10 spending categories plus income that I recommend that we work with. Now, as I said, you can use any range of categories you want. There's no magic to it. Some people like to break up accommodation into smaller amounts. Some people like to have the takeout, sort of more elective expenses of food in a separate account. That's fine by you. You decide how you want this to work. But the goal here is we want to analyze at least one full month, so the month of December. And I'd actually recommend you start with 1 month. Okay, go and do December, do that first. If you then feel you want to go back and do October and November as well, great, go and do it. You'll get more insight out of multiple months than you will by doing just 1 month. Okay, and again, December is an interesting month because we often have different expenses in December than we have in November. So this is why doing more than 1 month can be very useful. Okay, so we're going to do a quick exercise here, and just for the sake of time, I'm going to do it on the screen. I'd normally have you actually do this exercise yourselves. So give me a second. I'm going to grab my worksheets. I was supposed to have pre-opened, but I didn't. And I'll have all of this linked on the Dropbox page for you by sometime tomorrow, so that you can go back and try this yourself. Okay. Right, it's the other window. Okay, so there'll be a document that'll show you all of these transactions, and there'll be the spreadsheet where you can go and play with these numbers. But this is what it would look like. You'd go and grab or type in your activity for the month, and I recommend you monitor your balance here because you want to make sure you've got the same balance that the bank statement has to make sure you haven't missed anything. Okay, but the important column here is this number here. And then what you're going to do for each line is you're going to take that number of $115 and you're going to put it into whichever column it belongs to. So this says wages. So in this particular case, we've got a family where one of the members of one of the partners has a salaried income, and the other one does some part-time work and gets a smaller variable amount of income. So in this particular case, we've got wages for $115. It's a deposit, so it's going to go in as a positive number, and we're going to enter that in as income. Next line is food basics. So food basics are going to be groceries. So we're going to put minus 754 into that column. Paying off BMO MasterCard. Well, that's a credit card balance we're paying off. So that's going to go in as debt. We've got a debt to CRA. We're paying off $50 a week. So, whoops, didn't get that right. Minus 100. There we go. Debt to CRA is minus 50. Now, what you'll notice over here as you go, this turns from being a number into okay in the check column. So when it says okay, you know that you've got everything and you haven't made a mistake.
Peter, Peter.
Yes.
Hi, this is Ho Lim. I'm not sure if you want to, for this one, you want to share screen so it's more clear.
Good idea. Thank you.
All right.
Do that. Good thoughts. There we go. How's that?
Yeah, better.
Okay, wonderful. Okay, so I was showing you over here in this last column. If you've got it, if you've got the number entered correctly, if it matches this number here, it'll show up as okay. If you get it wrong, it'll show you the variance. Okay, so if it shows you a number, you haven't finished it. Okay, so what you do here is you just go through every single line and you'd say, okay, where does this number belong? This is ABC Inc. This is the main employment source. It's a positive number as a deposit. We're going to enter it in here. And you'll just go through and you'll just enter in and allocate each of these transactions into one of these columns. I'll give you some hint here. Mortgage, we're going to treat that as being accommodation. Kia leasing, we can treat that as vehicle for the case of this argument. The BMO, MasterCard, and CRA, they are debt. CIBC Visa, we are going to have another tab here with the Visa in it. And I would recommend, just for the sake of simplicity here, that you put the CIBC payment down as debt, and you'll see what's going to happen to that on the next page. Okay, so you're going to go through all of this and make a guess as to which category this belongs in. Let's go over to the Visa page, and we're going to do the same thing with our Visa. A spend is negative, and a payment coming in is positive. So here you'll see the payment coming in, the 833.47, and we're going to put that as a positive number in our debt number. And if I go over to my history, so here you'll see we've got a total of 983.47 in debt. Next page, you'll see the numbers come down and it's going to offset that number. Okay, so on this page here, you wouldn't expect any income because on a credit card, you're not having deposits except for transfers from your check account. And everything else, you're going to just sit here and categorize. Fido is your cell phone bill, and we're going to put that down as general. Walmart is kids' clothes. I've given you a few hints there. It's going to go down as clothing. We've got our repayment in there as debt to offset. Food basics is our food bill, minus 146.72. Mobile is, well, that's actually ESO here in Canada. That is transport. See, I originally made this template in New Zealand, and over the years I've been replacing it with Canadian terms, but every now and then I forget because I'm bilingual, you see. I don't remember what language I'm speaking anymore. Is it Kiwi or is it Canadian? It gets complicated. Food basics. We're an equal opportunity spender here. We go and shop at all the stores. Dr. Taylor is medical. Dental, all goes for the medical category. Okay, and so on. New jug from the bay, you say, oh, that's a small household appliance. That goes under accommodation. Okay, so you're going to go through all of these categories. I'll give you just a very short example here. And so what I recommend is that for the purposes of this example, don't worry about anything else in this worksheet. Just take the practice of allocating out these numbers on a small test sample and seeing how that goes. Now, once you've done that as the exercise, I want you to start trying this for yourself. Okay, you are going to want to take. I'll give you I'll link you a blank sheet with a few more rows in it. If you ever run out of rows, you can simply insert new ones. Oops, sorry, put on the wrong, just off the edge there. So you just simply insert new rows if you need to, but I'll give you lots of rows for you to be able to work in. And then just take one worksheet for each of your accounts, maybe for a month, so that you can track your balance and make sure that you put your opening balance up here, and it'll automatically calculate your closing balance for you. And if you get the right closing balance on your bank statement, you know you haven't missed anything. Okay. If you want to open up a CSV file from your bank, then you're just going to copy the column with the date, copy the column with the description, and then copy the column with the amount. Now, keep in mind that if you're downloading from your bank, they might have that in two columns, one for spends, one for withdrawals, and you'll have to manage that. And I can help you through some of that next week if you need it. Okay, but that's what I recommend for your homework this week is do the worked example and then go and do December for yourself. And if you're feeling really adventurous, go and do October and November as well. That'll give you a 3-month analysis, which is the best place for us to start when we get to the next phase of our budget setting exercise. Okay, so that's what we're going to end with tonight. Any questions on that?